So you sit down at the closing table, or maybe you get a chance to review it a day or two before settlement if your agent or your title company sends it to you early. But you look at the settlement statement and you see an extra $3,000, $4,000, $5,000 or more of charges that you weren't expecting. See, most people don't realize Maryland and its counties charges multiple taxes anytime real estate changes hands. There's no negotiating the rate, there's no option to defer, and it's not just when you sell. It can be refinances and deed changes that trigger these too. There's technically three various taxes: the state transfer tax, the state recordation tax, and your county transfer tax. Generally, we refer to all of these as transfer taxes. They're also typically included when we talk about like estimated closing costs. Now, under the standard Maryland purchase contract, the default is a 50-50 split of these total taxes between buyer and seller. However, first-time buyers get a couple of great breaks on their portion, and also the split can be negotiated differently in the contract. For example, buyers can offer to pay 100% to strengthen their offer, things like that. So the title company collects this money at settlement and handles everything, including actually making the payment. You don't have to send payment anywhere or pay these with your yearly tax filings or anything like that. But that doesn't mean you shouldn't understand it. These taxes directly impact your net proceeds and negotiation strategy. This is why you need an agent who helps you understand the full cost structure upfront, not at the closing table when it's too late. I break down this cost for clients using a net sheet well before we ever get to the closing table. If you want to know the exact rates for the county you're looking to buy or sell in, and of course loads of other tips and tools, check out my blog at ZachBurnhamRealtor.com.